Hi, let's continue our startup series next episode. So uh, we were talking in the startup series that how to convert an idea into a successful business. So the first thing we did was we validate the idea itself. And in a series of videos, we talk about how I categorize or place the idea into four different categories to find out where it fits and what it requires to make it an idea into a business. So not every idea, not every great idea is a good business. So we need to first identify whether the idea that is we are bringing in, or the entrepreneur or the founder um, who's bringing an idea, is actually a good business or not. Then the next stage is to prepare a proper business plan, because now we are converting this idea into a business. And if we start with a business plan before even investing, before doing anything, make a plan. And the what I did is usually divide the whole business plan into 8 categories. The first 3 categories are very crucial, so don't go into the next categories unless you made the first categories and you are convinced with these first 3 categories, which is the validate the setting up the objectives of the company, then define your product and services, go deep dive about them, and then marketing opportunities. So once you take care of these three and you're convinced that yes, the business is there, then go next step, which is to set up a company by setting up the sales and marketing, doing a thorough scan of the competitive analysis, and then details of the operations. So these three will tell you how your company will work. Once you have this, then select a team, a management team. So with these 7 steps, you are almost done with your business plan. Now it's time to convert these all into numbers. So my 8th section is called financial analysis. Before going that in detail, if any one of you have missed the previous videos, I recommend please subscribe the channel and go and look into all the other videos. Start from the beginning. So I put them number 105 or 109. Basically, there are 9 videos in this business plan only, and this is the ninth. So what we will be doing here is talking about how important it is to convert all the information into numbers, and this section called financial analysis. So the information that we have collected, like about the product, marketing, sales, cost, everything, this needs to be converted into numbers. You do it yourself first. Don't take external help unless you prepare yourself. Even though you're not expert into financial analysis, but don't bother about that. Just do revenue. Make sure that you have volumes as you can project. All the projection ideally should be 5 years. If not, at least make it 3 years. So first you put what are the numbers, and then volume of your sales. Then convert this volume into the revenue, because you know what is the rate of your products, etc. It will be easier. So first if you make the volume projections for the next 3 to 5 years, it will be easier for you to convert this into the revenue in terms of nominal value, dollar or rupees or whatever. Then come up with a cost. This has to be major cost elements, like how much you need to purchase the raw material, what is the rates coming on. So broadly speaking, if you want to do a business, you would know what is the major costs. So put the major costs in place. You have the all revenue, volume, and the numbers, volume and the dollar value. and major cost elements. Then you give this entire data to a finance expert who can come up, who will find more details. Then they will give you a full, complete plan. You need to, if you are not a finance person, you need help for sure. This is a complicated calculation. And if you do it, there are chances that you will make mistakes. So these financial guys will will convert the entire number into a proper profit and loss statement. The profit and loss statement, make sure that it has been categorized between gross profit, operating profit, EBITDA, profit before tax, profit after tax, etc. This will give you a breakdown of how your business is operating and what are the results and how the results are coming. This will also tell you whether your business is profitable business or not. You want to go into business or not. What are the margins at various levels? Once the profit statements is ready, then make sure that you prepare a cash flow. This is a major thing and a very important element of any financial analysis. Cash flow is important. This will tell you how much fund do you need, because the revenue comes later, the costs start immediately. That's why there is always a gap of negative cash. But how much? What is the magnitude of this cash? This will decide how much fund do you need to start before you even start your business, and at what time you need. What is the timing of the funds you require, and for how long you need. That all you will know only when you have a properly made cash flow. Once cash flow is ready, then the next item you need is the break-even analysis. Break-even means that at what level you will have no profit, low loss situation. That is necessary for you to survive in the business for some time. If you have a negative if you don't even reach to the break-even, means you will keep on funding the business for a very long time. So you need to know exactly when you will hit the break-even, because after the break-even, then you will probably be successful. So you need to know how long break-even situation will be there. That will summarize your financial analysis. Mostly, if you are making this for external parties, then you will probably require the valuation of the company also. You will also require what is the payback period if somebody is investing into your business. These information generally excluded from the business plan. They go into the information memorandum or the investor's deck. So for business plan, you need to know what is going on in here. And you can use business plan. I mean, you can give it to the investors, you can give it to the other partners internally, externally, large suppliers, your customers also. Sometimes you need to know what's going on here. You can do that, but never forget, the goal of your business plan is to convince you as a owner of this whole project, as an idea bearer, that your idea makes sense or not. So make sure you are very honest when you make the business plan, because this is for yourself, and because ultimately it's your time, your money, and your effort which is on stake. So be careful, be honest, and make the plan. With this, we conclude our business plan series of videos. In the next videos, I'll talk more about the other elements for the startups. Till then, this is Abdulaziz, Senior Partner, Business Consultancy, GetLink Group. Thank you.